Well, and I actually think that's oftentimes a big factor that in an investment in commercial real estate, getting the loan to get into it. And then now you have the collateral of the property, then you can do a refinance
Yes,
later, or you can do a great rate and then cash out refi.
yes.
And in right now, what we're seeing, especially in the multifamily world, is people are assuming loans. And that is something that is a relatively new phenomena where they're going in and they're still having to go through all the hoops of as if they were taking out the loan, but they're actually assuming the rate of the previous buyer because unlike the rates right now, they may, even with their early payment penalty, they may still be better off with by assuming the loan.
Yeah, so I'm seeing a lot more seller carry. I talked about this the other day, where the seller was like, I can't get 7% on my money anywhere, and I don't need $3 million. The buyer couldn't get anything less than 9.5% from an SBA, and they were going to have to put a lot more money down. So they're like, yeah, just pay me over time. Yeah, sure, I'll just pay you over time. And it was a $3.5 million deal that would not have happened if somebody hadn't suggested the idea that they just keep it in house.
Or it can be a portion of either.
Yeah, absolutely.
Yeah, and I'm seeing that a lot more
100%.
right now, especially on the business brokerage side, where the bank will say, I'll only loan X, and then the owner will carry back the remainder. Obviously with the caveat that it has to be delayed in most cases, but they're still willing to do it because they're gonna get their big chunk up front, and then they can spread their capital gains over time.
Exactly. So I use some Baker's math, which is 12 equals 13. When I look at an interest rate, and if I can get a portion of seller carry financing of 100 or 200 or 500, whatever it happens to be, at 0% over time, I'll play the math with the borrower. Like, hey, it's not actually 8%; it's actually 7.25 because this chunk is
It's the total effective rate.
exactly total effective rate or blended rate. So it's a great way to sell somebody on like, wow, that's a really high rate. Well, if you look over this thing over here, this kind of actually makes it all well and good.
Yeah, and it balances it out.
And ultimately, it doesn't matter what the rate is. It matters what the impact is to the P&L, generally speaking, for most people.
Okay, so we've talked about the number one thing is don't go in and go, so what's your rate?
Yeah.
All right, so give me a couple of other mistakes that if I'm coming to you for a loan and I'm saying, so I haven't said what's your rate, but what is another thing that is going to immediately set your teeth on edge?
Yeah. So it takes babies 10 months to get here. So we have fully time to prepare for them. And if you just suddenly decided you're going to have a baby tomorrow and you have a baby today, you might not be prepared. So if you suddenly decide that you want to buy a building or buy a business last week and you go to your lender with documentation that's not really ready, that's going to make it difficult. So give yourself time to prepare your financials. Get a CPA, invest in somebody who's going to be able to clean up your books, because your ability to borrow, yes or no, your ability to borrow at rates that you feel are appropriate for you, yes or no, is going to be explicitly dependent on your accounting and how much money did you pay the government. And
Sure.
I'm not saying for everybody to give a set of taxes that you give your banker and then you amend them 6 months down the road, even though it is allowable in the IRS tax code. I'm not saying that you should do that. I'm saying that pay your taxes, pay your taxes, save money, pay your taxes, get a loan, save money, have a little frequency where maybe you pay Uncle Sam every now and then you go get a loan the next year. It'll make your life way easier. The next one, in terms of what you should be prepared for, have your broker investigate you like a banker would. Credit character. Because you can do searches on people. You can just take a look at someone's credit. You're like, hey, you've got $8,000 of outstanding credit card bills where you're maxed out on a couple cards, but you've got $400,000 in the bank. How about we just pay those things off now? And you get a bump in your credit, and we don't have to explain it. Oh, well, that makes sense. I just write the $50 check a month. So doing some spring cleaning on yourself is really, really good. If you're going to be trying to refinance your own building and it's going to be kind of tight on an appraisal and things like that, damn, go paint the thing. Clean out the warehouse. Like do little things to make your building make it look like you've done something. Don't have cobwebs around because it just shows that you don't care. And when you show people that you don't care because there's a terrible carpet, where else are you not caring about the business? Bankers, like you'd be amazed at the questions I have to go ask and answer because my chief credit officer said, why is there like 4 rusted out cars in the back parking lot? I don't know. Didn't know those were there, and I will figure it out and I'll get them removed. Like it just it doesn't have a good look. So that's doing an investigation on yourself. And oh, here's one. Google your own business. Hey Dan, why is it that this guy's got 51-star reviews? I have no idea. I'll go figure that out. And like it's just so embarrassing when me as the loan officer or the broker didn't figure out that this person has the worst pizza in like a 10-block region. Like that's a tough loan to get done.
Yeah. We have a question.
Yeah, so I guess so multifamily investors, so
Yeah.
we're always considering recourse, non-recourse, bridge,
Yep.
agency, credit union, small bank. So
Yep.
it's very, very comfortable in that space. But I guess have you ever are you able to broker well, let me back up. So when a bank is lending money, they have their how much it costs them to borrow the money, or they're just lending from their own internal
Yeah.
vaults. And then there's the lender spread, right? 100 to 200 basis points on top of that is the bank's profit.
Yep.
Are you familiar with any products where they are lending at lower than the lender spread? So the bank is taking like a tax credit or an expense, right? Where they're lending at a loss. Are you familiar with any?
So I know what you're talking about. There's some, I mean, that's buying the business. There are banks who are absolutely buy the business. And if you're going to go buy a 3,000 unit apartment complex and have the entire banking relationship with the bank, they're like, we'll go ahead, we can, our cost of funds is low enough where we're going to absorb it. It's a loss leader on the rate for the building. And because we're going to get this huge treasury management piece. So I've seen those. My question is always, and I get this kind of similar question, like where can I get the best rate in the world? That's actually the question that you're asking, I think. Does the deal require the best rate in the world to get done, or is it just like a rich person getting like a 16th of a point richer? Those are two different, like, do you do the deal is one of those things. If you need the rate to do the deal, then it's probably not a good deal. Or if it's just a rich person getting richer, then I'm not, this is my own thing, like take whatever the market is able to give you. So it's a incredibly competitive lending market inside the multifamily space, especially the last few years. You probably have seen this. Lenders want that product. And if you're out there hustling and finding buildings and doing deals, you're going to get the best rate that's available to you. Like they're not going to try and gouge or make rate on somebody who's a good operator in multifamily. I just don't see that. Are you having the kind of the same experience?
I mean, yeah. There's for stuff that's actually closing. I'm bewildered at some of the products that people are getting.
Low rate?
Low rate
Yeah.
for agency on high dollar purchases.
Yep.
Even into last year into August, where the bottom fell out of the market in July, people are still getting in threes.
Why do you think that is?
For the agency product, probably. I mean, I think relationship and the team is probably top of mind.
Okay.
Appetite for the market. If it's one of the fastest growing markets in Tennessee, for example, right? They want to be there. I have a theory about B of C plus workforce housing. No one's building it anymore, so we'll call it barrier to entry.
Yep.
Versus a new development. I'm seeing worse terms on new construction.
So I think it's something else. I think that those are the next layer down. But I think what it is actually is there's trillions of dollars that's not in the market, that like in the stock market, that is sitting in a bank rotting. And good real estate, Chinese money, Brazilian money, Russian money, Saudi money. There's no better place to put money than into U.S. commercial real estate. And they don't care if they're getting 3 because in their own bank account, they're getting -1. So there's so much money to be deployed. I talk to my capital providers. Hey, what do you got for me? What do you got that's really terrible? I need to go place. They're telling me I need to go place this money. My own bank is saying, we're trying to hit this goal. We're not limited on funds. Go find us deals. So it's, you go find a deal and people will give you the money. Like it is not difficult. If you have a junky deal, show up in a suit and tie and you still might get the money. Like it really, there's a lot of money to be deployed.
Well, but people are getting rejected, and we do, because of various different reasons.
Yeah.
They didn't show up in a suit, or whatever, they came with the big packet or all that. So we have kind of our equivalent, and I think you might have something similar to this because I know you well. But for example, if somebody's getting ready to start a new business and they think, oh, great, the first thing I'm going to do is go look for space. Right? Well, that's actually number 6 on the list, right? It's not the first thing you should do. And so when they come to us and they want us to start immediately going and helping them, the question that I say is, well, tell me about where you're at in your business plan and what you've got going on. Instead of me saying no, I'm saying no, not right now, but well, let me help you get ready. And so we have a new tenant packet, which we actually do. It's a checklist that says, here's what you need to do to get ready so that you can look good for.
Do you have a lender?
Do you have a lender
that likes you, that knows your name, that calls you back?
Right.
Yeah.
Well, and that is actually one of the most important things, because people have in their minds, and this is a myth, kind of like this, what you were thinking, what you said at the very beginning is that they're going to go in and a landlord's just going to build the Taj Mahal for them on the landlord's dime. They're not thinking in their minds that they're going to have to go in and that the landlord is going to require them to use a lot of their own money towards the build out. They might contribute some, but you're going to have to meet with a banker.
Are you finding that good deals are getting declined, or so-so deals are getting declined, or bad deals are getting declined?
I think that they're getting declined because people are not ready for banking yet. They have not. I think so. So I think it's the people have not been prepared yet.
Okay.
And so rather than for me to say, don't do it, I say, here's what you need to do it. And I actually provide them with the sample business plan.
Yeah.
I tell them, I literally give them, here's what you do to be able to qualify for a loan. So I'm essentially pre-underwriting them, teaching them how to do that.
Live Plan is a great place to go. It costs you like $30 a month. And in 2 months, you should be able to get a business plan put together. So Brian, you have a question?
No, as you were talking about, which kind of loans do you see get turned down, or you're talking about good loans, bad loans, whatever?
I've got one right now that the people make a lot of money with this big marina down in Georgia. They've got other investment interests. They've got a ton of equity in other places, but on paper, the darn arena just doesn't make money. It's negative 400, negative 300. And so from a government lending perspective, it's a non-starter. The SBA is a cash flow lender. So when it just doesn't have the ability to pay for itself at present, that's the biggest one for a decline.
Well, what I was going to say on that question is we're seeing credit unions really stepping forward right now because of one of the things you mentioned, which is, hey, we have a lot of money and we need to deploy it.
Need to deploy, yeah.
So their rates are, I'm
Very
working with
competitive.
a client right now. I've spent a good part of the afternoon on the phone with him and 2 or 3 credit unions. And, I've been really shocked that some of the rates that the credit unions are throwing out to him and offering interest only. And, then the one credit union just said, yeah, we've got a lot of money that we got to deploy.
Yeah, so
And it's not the banks, it's the credit.
And so in the how do you go find capital, there's actually a 1.5 question, which is geography. If you're going to call on credit unions, first question is, do you guys make business loans? Credit unions are actually split. I don't think it's 50-50, but some of them actually make business loans and some of the biggest ones don't make business loans. If you take a look at the credit union charter, there are 4 members. There's this gray area where someone would feel like they should be making business loans. I'm of the feeling I'm glad that they do. I don't think it's actually a credit union's charter or goal to make money on business loans. I think they should be doing other things, but that's like, I'm not going to change the NCUA. So if you're going to call on credit unions, expect a great rate and expect to open up an account with them. Like, they're going to require you to become a member, but they have great rates. Buying a house, building a house, developments, if they're in the business of doing business stuff, go there, is what I tell everybody. If they say no, then come back and talk to me.
One of the reasons why we see people being rejected that are, they are eager investors and they've kept doing the cash out refi. And now they're over leveraged. They actually, have collateralized upon collateralization. And so they actually are stuck where they're not, their liquidity and their collateralization are not matching up to the bank's criteria.
Yeah, and
It's a common mistake.
yeah, and that's one of those things where if somebody's making $100,000, I'm getting $50,000 a month net, and they are stuck because they've got 10 buildings and they can't go buy another building. Well, maybe just like relax for a bit, like be content, or go get a job, like figure out a way to like maybe flip some of your deals, and you're not a long-term investor. Passive income is a nail that you hammer in, but the hammer is the mechanism by which you go and raise more capital, go and find more deals, go flip more transactions. So you can't just be doing passive income in forever. You actually have to go like bring some appreciation into a project or bring some sort of new equity into the market. That's how you get the ability to do more. Like it's passive income is great, but it's not for every person because they just don't qualify for it.
Well, so we were talking about all the secret little inside things, right? One of the, I had a bank friend say, speaking to the character side, that they'll ask you for everything, and then the underwriter will ask some question that is exasperating, and they'll do it just to see how you react. And I thought that was really crazy. And he said, in this particular bank's case, they're testing to see how cooperative you will be, and they'll ask you for stuff, even if that's not necessarily for underwriting. That is maddening to me. I mean, it's a game. That makes me crazy. I've seen it though. I've actually seen it.
I disagree. I don't think it's a game. I think there's so many layers where people will create. In fact, I know firsthand that people have created their own guidelines outside of the bank's mission and vision. And then when they get called on it, like, why are you doing it this way? Oh, I just decided to do that a year and a half ago, and it became SOP. And then they're like, don't do that. You're actually gumming up the works. Like, oh, sorry. Like you have well-intended people inside the little silos of the process.
Yeah.
So it is, again, it's not a game. I think it's also, if it's a game, then they're also testing the BDOs and the actual bank personnel to see if they've got the resilience to work past it as well. Because it is maddening from the inside. When I ask the internal people how long, and they give me a number, and I give you the applicant the number, and then that changes, I'm the liar,
Right.
not the bank.
Then I just want to go.
Yeah. And it's even worse if
I need
I tell
somebody
you,
to
the
choke.
broker, and then you tell your client,
Sure.
and then you want to kill me, and like it's a whole
Right.
choke
Well,
fest.
we're extending our reputational capital, recommending you,
That's all we have is a reputation.
and then the bank abuses that relationship,
All the time.
and we see them as where we're really starting to struggle this in the last couple of weeks is that the banks have no apparent care of deadlines for contracts. They make the assumption that, oh, well, you can just get an extension. No, that's not. And well, if you want the money, then you're going to have to get an extension because I went on vacation, so I'm going to have 4 more days.
The one person who handles the red envelopes is on vacation.
Yes, exactly. And we are, as the brokers, stuck now trying to negotiate, and there's a deal on the other side. I know you've had this where they've got a second offer and you're up against a deadline, and they're not going to give you the extension because they want this deal to fail because that second offer is higher, right? I mean, we literally saw that a lot in the last quarter where when the rent rates went up, they wanted to wait and see where the rates are going to go, and so they just drag and drag and drag and drag. And meantime, the deadlines for the contracts are clicking on. And
What are you?